Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, October 9th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. Here's a look at the ES in the daily time frame. Friday, the ES finished very, very strong. Went outside day down initially, turned around, and went outside day up with a big-time bullish finish. You can see here, heading into today's RT8 session, a gap down in the after hours reopen here Sunday evening. We have a very narrow range heading into the RTH open right now, just 23 points and 34% of average range. So we could be looking at some range bound action for much of the day here, especially as the market anticipates the inflation data later this week. So the market will be with all eyes watching for PPI on Wednesday, CPI on Thursday. That could lead to quite a bit of activity here later on in the week. Now, Friday's reaction, is this a strong low? Is it the beginning of what could be a strong low? It looks the part. It looks the part. When you look back at some of the lows here that we've seen since the last Q4 of last year, this is right on line. This is right on line with where you'd want it to be. We have an uptrending channel that's been in play here, and we finally finished this 3 month pullback with a strong low here right off of yearly VWAP, or at least year-to-date VWAP at the moment, right near the 4200 edge, and that could provide a solid continuation to the upside where you go back to 4600 and perhaps even higher down the way. So it could be a strong low here, maybe not the strong low, but good enough and strong enough for what could be a medium-term turnaround here. Now, keep in mind we have sold off ever since the FOMC key level here in September. If this is a decent enough low, we're likely snapping back to that at the very least. That's 4,500 up above. Lastly here, previous quarters low right there, reacting and rejecting there brings you back to the previous quarter's midpoint. That's going to be about right there. 44.56 could be in play. All right, here's a look at the NQ. NQ right now trading 23% of average range. 23% of average right now. 68.75 points. Been averaging 280 on a 10, 311 on a 5. You can see a bit of a gap down here Sunday evening and holding in a narrow range ahead of the RTH open. Again, very narrow range here over the last couple of weeks. That's building some significant energy. Like the ES, this one has developed a nice reaction here off of 14.6 support. Bit of a rounded behavior here, rounded top action there, but within the upward bias, this could be very, very bullish. So right now we have a reaction that's developed here on this right edge, 14.6 holding very nicely. If price can start to push through the 15.2, that starts to really open up these highs. You could be looking at 16K very quickly with the potential for even prices beyond that. So one of the things we mentioned before was, do we go outside quarter up this quarter? Outside quarter up would be down through the previous quarter's low, then turns around and goes through the previous quarter's high. That could still be in play, although we didn't quite hit the quarterly low. We got very close and are now working our way up. Bulls want to keep this level right here, 14.9 bid, for a shot at continuing this thing higher down the road. Again, CPI and PPI later this week will be very, very important. Taking a look here at crude oil. Geopolitical conflicts here raising the price of oil tremendously, especially with the attacks in Israel and the counterattacks that will happen in Gaza. So again, that leading to a big time gap here Sunday on the reopen, a big push right back to 87.22. This is the breakdown point, was 88s. Mentioned here that we snapped back to 88, but in breaking 88, dropped this thing all the way to 81.5, and then snapping back to the breakdown point here. Now, one thing we talked about before is this market, it trades within 10-point distributions. You have 84 right here, not a good line. Here's 84 there, and you got 94 there, and 74 was down here. We traded in the upper portion of this 10-point distribution. Now perhaps we may trade in the lower portion for a bit. If we fail Back below 84s here, we could be working our way even lower. But right now, holding on this little pullback here, this is going to be an important zone. If it can't get through 88s, perhaps we trade between 88 and 82 for a bit. If we do get through 88, it opens up new highs yet again. Looking for a midpoint retest, that could give us a new key range to work with as well. Looking at gold futures, this one's up 0.9%. Big gap up here. 4-day narrow range, back and forth within the narrow range, eventually finding a strong low on Friday and leading to an outside day up. Gap up right now in a downtrend in the bearish Pima trigger zone, retesting the previous quarter's close and low from below here. This is going to be an interesting spot here as bears will look to defend and try to rotate this thing back down. Now overall, this market right here has been very, very bearish. Taking out the 1950 level, taking out value and dropping into 1830. We talked about that as being the break-even point for the year. Now, do we still get one more wipeout into the lows of the year? These are the lows of the year right here. Do we take those lows out? Nearly got those lows here. This is value. Maybe this pullback offers one more rotation down. If this market can start to push back above the well, in this case, you really got to get back above 1900. Any bounce right now could take you up to 1900, but then that could be an opportunity to bring it right back down, as this market is now trading between 19 and 18. Before, it was 19 to 2000. So 100-point distributions at the moment for GC. And lastly, taking a look here at the YM. The YM right now down about 0.5%, gapping down. Sunday on the reopen here, you can see right there retesting the breakout point. This was a huge outside day. Initially outside day down, then price went outside day up in big fashion. You can see again this market attempting to form a strong low off the 33K level. And when you look back at again how this market has responded off these lows, it's been very similar. You've seen very similar reaction here, very similar reaction here. We're seeing it again here. The way it turned off of these lows. A lot of strength that was seen in the following week. So again, we'll be watching to see how the market receives PPI Wednesday, CPI on Thursday. That could provide follow through to the upside from these lows. Can the market hold in this zone here and then recover the previous quarter's low? If so, again, you're working your way back up. 34,500 and then up the way toward 35,500 could be ahead. So holding in this 33K zone, watching to see can we develop a strong low or work off of this developing strong low higher. And if so, could be a nice little move here again of about 2,000, 2,500 points back up the way. All right, that is it for now. We'll see how this develops here heading into the new week of trading. Good luck, trade well, and I'll see you in the trading room. Take care.